The vast majority of money that's going to go towards impact-oriented businesses is not going to come from impact investors. First, because there are hardly any impact dollars out there. So like the Global Impact Investing Network does a sort of an assessment of all of the impact dollars that are under management currently. They count it as more like $120 billion globally. That's like a drop in the bucket in terms of sort of global assets generally. And of those dollars, only about 4% are earmarked towards early stage investing, which is where sort of we as a tech investor play. And at the same time, I do think that much more traditional institutional investors are starting to take this space more seriously. Although I think most of them would die before they self-identified as impact investors, and for a variety of some very legitimate reasons and some not. And I think that's really reflective in terms of our experience as a funder. So we're a pretty traditional venture capital fund. We have investors ourselves. Most of them are institutional investors who are traditional investors. They're pension funds, they're hospital systems, they're foundation endowments. They're all pursuing market rate returns, but I would describe them all, or what I've been telling them that I've been describing them as, is impact curious. So they're pursuing market rate returns, but they're looking to start aligning their investment practices a little bit more closely with their organizational objectives. So if you're a police pension fund, it doesn't look good to be investing in weapons manufacturers, for example. And so that doesn't necessarily mean they're going to swing to the opposite direction and start investing in, extremely below market rate opportunities in Myanmar, but I think they're at least open to the idea of starting to align their portfolio, and that's definitely what we are seeing in terms of folks who are investing in us. And I think more realistically, in order to achieve those objectives that the UN has and that I think we all share, it's going to be activating those traditional investors to start seeing you can make money, or ideally, better than market rate returns, by investing in businesses with strong corporate governance, who are pursuing markets that are perhaps underserved by technology but could really benefit from access to technology. And so I think ultimately, to sort of sum it up, I don't think impact investors are going to be meeting those impact goals. It's going to be everybody else.